School of Investment brings you update on impact of Adani's crisis on Indian economy. With India's economy growing at a breakneck pace, billionaire Gautam Adani's empire would derail Prime Minister Narendra Modi's economic plan. Mr. Adani, the billionaire, who is based in Australia, has been trying for years to build a plant near the port city of Bikaner that would process and store crude oil from his current project in Australia to take advantage of India's surging demand for energy. Last year, the company won a bid to develop Australia's largest coal mine after Modi toured the site. The project cost is estimated at $12 billion. He bought a 70% stake in Australian rail company CP and an 80% stake in Indian air carrier Qantas from mining firm Rio Tinto for 27 billion Hong Kong dollars back in December. Adani has been accused of widespread use of illegal funds by Modi's government, who have frozen his assets. It was widely speculated that Adani will be named the next president of the ruling BJP party when the current incumbent, Amit Shah, retires later this year. Narendra Modi's vision of transforming India into an economic powerhouse has always had a highly competitive business environment to work in. And this is exactly what Gautam Adani was using against him. The oil and gas tycoon, who was most recently the country's richest man, is after Hindenburg repot, is pulled back as he has to deal with an increasingly aggressive reaction from its investors. A recent Indian media report said that Gautam Adani, a state politician and the owner of a $5.6 billion fortune, lost $109 billion as of yesterday. The Hindenburg research, Hurl, which short-sold Adani $660 million in short sale profits, is blamed for this catastrophe. After all, how did this happen? According to the report, Hurl's CEO and executive director Ronald Bell sold Adani's stock with the purpose of stopping free competition, which contributed significantly to his losses. The pre-Hindenburg $236 billion company was worth $127 billion by February 8. And the ripple effects have been vast. Adani's loss comes on top of the $6.7 billion he suffered in 2016 and leaves him with a total loss. The ruling of the Fair Trade Commission in India may mean no big money deal is coming to the country. There's a reason why the kind of corruption that happened with Adani Enterprises is now illegal. And it's not just about Adani. An estimated $109 billion in black money was hidden offshore and kept by Indians who created companies abroad, then borrowed heavily from these assets, often issuing bogus documents about their assets to conceal their true value. This sort of secret wealth probably explains how some billionaires got rich. India is facing a critical juncture in its economic development. The Adani Group has been embroiled in a series of financial and legal crises that have threatened to derail the nation's economic progress. This has raised serious questions about the efficacy of India's economic vision and the ability of its government to effectively manage the country's resources. The Adani crisis has highlighted the need for India to reassess its economic vision and develop a more robust and comprehensive strategy for economic development. This strategy must include measures to ensure greater transparency and accountability in the management of public resources, as well as measures to promote sustainable economic growth. It must also include measures to ensure that the benefits of economic growth are shared equitably among all citizens. Hope you liked our video. Thanks for watching and stay connected for more updates.